Paul Buitink, and I'm honored to be here on stage. Second time. Last year I was in a panel together with my buddy Jeroen Blokland and Dylan Leclerc, and today I'm going to give you a keynote. And for me this is sacred ground, because the Westergasfabriek is where I used to go to techno parties sometimes, awakenings. Maybe some Dutchies here that have also been to awakenings. Woo! Give it up. I'm getting almost the same vibe here today as I felt during all these techno parties. But this is an amazing venue. It looks great, so thanks so much for having me today. I'm going to talk about gold and Bitcoin, or I must say Bitcoin and gold in the right order here, of course, and why they're friends and not foes. To do that, I will first show you this, because of course all of you know that the financial system is crumbling in many ways. And I'm going to dive a little bit deeper later on. But we all know inflation, high debt, and that's why we like Bitcoin so much, because it provides us with an opportunity outside of the system. Oh, let me see. Okay, yeah. Cool. So what will be next? That's the main question. Are we going to see gold? Are we going to see Bitcoin? Are we going to see something else? My point of view is that you need to hedge and choose both alternatives. I'll explain to you why. Because basically, we as Bitcoin and gold bucks, we share the same diagnosis. We all think that the financial system is fundamentally unsound. Only the remedy is different. And I'm going to tell a little bit about my own personal journey, how I went from being a gold buck to being a full Bitcoin buck to being more like in the middle. So currently I am managing director and co-owner of one of the biggest precious metals companies in the Benelux. It's called Holland Gold. But I started at Gold Money in 2010, which is a big storage company for gold and silver. It was founded by two libertarians, James and Jeff Turk, and they really told me the value of hard money and of sound money. So back in 2010, I fully went into precious metals. And of course, being in that scene, in the scene of competitive currencies, I found out about Bitcoin relatively early. In 2011, I remember going to a first Bitcoin conference where Amir Taki used to speak. He's one of the first Bitcoin developers. And I was amazed by the novelty about the technology of being able to send money across the world without borders, independent of time. But at first I was like, nah, it doesn't have any backing, you can't touch it, it's not physical, it's not intrinsic. So I first rejected it. But then I started loving it. And in 2013 I decided to become a full-time evangelist, basically. So I started a Bitcoin podcast together with Tuur de Meester in Dutch in 2013. And I traveled the world to talk about Bitcoin for a few years. And I just loved it, everything about it. The events, the community, the innovation, the spirit. But then later on, a few years ago, I realized, okay, Bitcoin is going to be a marathon. It's going to be exhausting. It's going to require lots of energy, lots of applications, lots of strong will to make it work and to make it eventually big enough for the whole world to use it. But the financial system, of course, was still struggling and breaking. We've seen many crises over the years. Of course, we had the big financial crisis, which made me learn more about the financial system. But we also had the euro crisis, we had the repo crisis. We've had so many things going on in the financial system that made me still, or that kept me worried. But Bitcoin wasn't taking off as much as I thought it would be. And gold all of a sudden became center stage again. Because we saw, especially 2.5 years ago, when G7 decided to freeze Western assets, or freeze Russian assets, euro assets and dollar assets, that the BRICS countries were betting on gold. And I see it in my own company. I see a lot of demand for gold. A lot of Bitcoin people also like gold because they understand that maybe Bitcoin is the ultimate form of money, but in the meantime, there's a journey where gold could shine again. And that's something I realize too. So right now, I hold the view that, at least for the next few years, you need to own both if you want to get the most out of your investment portfolio and if you want to maximize your hedge. So A little bit about Holland Gold. We have almost $500 million in assets under management, so gold and silver stored in vaults in Switzerland, Singapore, and Holland. We have 70,000 customers in the Benelux, and we're going to expand across Europe as well. And we have 4 offices in the Netherlands. And recently we bought the competition Amsterdam Gold, so we are now firmly the premier precious metals company in the Benelux. So just to summarize and remind you guys what's wrong with the financial system, there's too much debt across all markets, not just Europe, not just the US, China, everywhere we see the same problem. Politicians and central bankers, they still believe they can grow themselves out of their problems by issuing more debt and by lowering interest rates. And we all know where that leads to. It leads to inflation. Maybe temporarily the inflation is down a bit, but in the long run inflation will go up and up and up and up, because that's the only way they think they can try to exit the debt trap that all the markets are in. Geopolitical instability, that has been a key driver for gold, and especially what I said earlier, the freezing of Russian assets. That's also what central bankers tell me. Every time I talk to central bankers or former central bankers, I interview them quite often for my own podcast, they all say the same thing, that the world, the financial system, the financial world, especially emerging markets, they've lost confidence in Western currencies. So while it seemed like a smart plan to freeze Russian assets, to make them pay for the damage, in the long run it was shooting yourself in the foot, because the Chinese, the Indians, the Arabs, they all think like, okay, maybe it's not a smart plan after all to keep a lot of money stuck or tied up in Western assets. So you see a loss of confidence in the Western currencies, and you see this split between G7 and BRICS. And the BRICS countries are betting on gold at the moment. The World Gold Council, they do regular surveys, and every time in these surveys you will see that these central banks, they buy gold because of the issues they see in the Western financial system. So I believe that we're going towards a new financial system, and I'm not sure how it's going to look like, but if you want to hedge against a collapse of the current system, it makes sense to find outside money alternatives. And I believe that both Bitcoin and gold could serve that purpose. If you look at them together, Bitcoin, of course, has great technology, much better than gold. Also, Bitcoin's ROI has been much better, of course, over the past, let's say, 10 years. And gold, on the other hand, is a safe haven. So let's look at the technology first. Well, you see, I've traveled with Bitcoin. It's so easy. You have your own wallet. You can put it in your mind. You can put it on a USB, on a ledger, whatever. It's portable. It's easy to travel with. Gold, on the other hand, if you carry more than 10,000 euro of gold, you have to declare it at customs. It depends a little bit on where you go, but within Schengen, 10,000 is the limit. So it's much more difficult to bring with you. So on the technology front, Bitcoin clearly is the winner in terms of portability, but also in terms of verifiability. With gold, you sometimes have fake gold bars, all sorts of things. Also divisible. Bitcoin is more divisible. You have gold-backed stablecoins, of course, that solve that problem of divisibility. But then you still have to trust the operators of the vault. And with Bitcoin, not your keys, not your coins. With gold, some people say, not your vault, not your gold. So you have some of these issues you have to deal with. So on the technology side, I would say Bitcoin is the clear winner. ROI, Bitcoin, of course, has been one of the best investments over the past 10 years. But of course, also sometimes one of the worst. Volatility is much higher with Bitcoin as it is with gold. And I keep on hearing, and I keep on saying too, that volatility over time will go down with Bitcoin. And of course, Bitcoin is not as volatile anymore as in the first few years, but it's still quite volatile. I would say still too volatile for most people to actually use as currency, and gold is less volatile. But the ROI of Bitcoin has been amazing, of course. But then the safe haven status, Bitcoin is not yet a safe haven as much as we want to. I mean, in 2013, I was for Bitcoin magazine actually in Cyprus, where you had the bank crisis, and there we saw Bitcoin going up a lot. Maybe that was also due to the bank crisis in Cyprus. But in general, we don't always see Bitcoin behaving as a safe haven. Take, for example, a few weeks ago when Iran attacked Israel, and of course then I directly follow the markets. And you see the dollar getting strong, or you see gold going up, you see Bitcoin in the chart going down. So Bitcoin for now is more correlated with tech stocks than it is with gold. The nice thing about gold is it's just not correlated with stock markets. So if you add gold to your portfolio, you basically get on the long run a better return on your whole portfolio. And Bitcoin doesn't have that yet. Also, the central banks have been buying record amounts of gold. In 22 and 23, they bought 10,000 tons of gold, which is like 70, 80 billion of the shiny metal. And that's huge. And this year, the first half year, is already a record half year. And at the moment, gold is already a bigger reserve asset than the euro. So the euro used to be number 2 asset. Of course, most reserves are still held in dollar, although it's going down too over time. But gold has now overtaken the euro as the second most held reserve asset by central banks, which is the sign of times. And if emerging market central banks want to have the same amount of gold as a percentage of their total reserves as the Western countries, there will be massive amounts of buying of gold over the next few years. Today, for example, there's a summit at the Banque de France, the French central bank, with 75 central banks to talk about how to manage their gold reserves. No such events are taking place about Bitcoin. Of course, we know that the Central Bank of Norway and Switzerland, they bought MicroStrategy shares, which is an indirect exposure to Bitcoin, which is a good first step, but it's still way too exotic for these boomers. Let's be honest, central banks are run by usually old folks who don't understand Bitcoin yet. If you talk to them, they would still say, yeah, I like the technology, the blockchain, the Bitcoin. They've been saying that for 10 years. The narrative hasn't changed. They still think it's about the blockchain, not about digital scarcity. So it's not going to change anytime soon. Of course, they suffer from groupthink. They hang out in the same circles. And within these circles, they know gold. They are proud of the fact that they have gold reserves. And Bitcoin is just not yet on their radar. And maybe, of course, some of these central banks are buying Bitcoin and we don't know about it. That would be a smart bet. If I would be a central banker, I would start buying. But and we know, of course, that Trump and Kennedy, they talked about having a strategic Bitcoin reserve. Let's see if something like that is going to happen. Because El Salvador was nice and everyone got really happy, me too. I mean, great, like a country adopting it. But we all know that it's not really being used there. But it's a good step. The waiting is now for a more mature sovereign wealth funds or central bank to actually start acquiring Bitcoin in better volumes. But for now, central banks are focused on gold. Also, Chinese retail demand in gold is up a lot. So a lot of Chinese people are buying gold and silver and not so much Bitcoin. We see, of course, that in China a lot of things are going on. Stock markets have been drama over the past 10 years. And now finally, because of QE, stock markets are going up again. And maybe real estate will also profit. But in general, the Chinese, they're really also trying to get into gold, as you can see from retail demand, which is at the highest level in 10 years. Also, the gold ETF flows are up again. So there, over the past few months, basically there was gold going out of Western ETFs and going into Asia. But now also we see in the West that the ETFs are gaining again, which is also an important sign. Then crypto, the trading volumes are going down. Over the past few months, we saw in March, of course, because of the ETFs, that there was a huge volume, but it was just a spike. And afterwards, we've seen crypto volumes going down, and prices are relatively steady now over the past few months. Bitcoin is still a better investment this year than gold. I mean, gold 28% is not bad at all. For gold, it's off the charts. We're not used to those types of levels in gold. Bitcoin, on the other hand, still a solid 43%. And a lot, of course, now depends on whether Trump or Harris is going to win. If Trump wins and he's actually going to implement a strategic Bitcoin reserve, then pretty sure prices will be much higher at the end of the year. If Harris wins, perhaps a bit lower, we'll see. Well, then the market caps combined. So first, we see gold versus Bitcoin over the past few years. Then you see Bitcoin is gaining market share. Market cap of Bitcoin is now a bit more than 1.2 trillion, I believe. Gold is more than 17 trillion. So what I'm going to expect the coming years is that gold market cap is going up, Bitcoin market cap is going up, and Bitcoin market cap versus the gold market cap is probably going to increase. But both, to me, are going to go up a lot over the coming years based on everything that's going on in the financial system. But it's an interesting race to keep an eye on. And of course, Bitcoin was nothing in 2014 compared to gold. But now it's rather impressive what Bitcoin has already accomplished over the past 10 years. And if we look at some big companies like Apple, Nvidia, gold is still much bigger as a market cap. But also silver actually is bigger than Bitcoin at the moment. It's also an interesting metric to keep an eye on. Of course, silver is not as discussed as is gold, but silver can still be seen as poor man's gold. For quite some people, it's interesting to keep some silver, you know, as sort of emergency money should the system collapse. At least that's what a lot of my customers say. That's the reason why they buy some silver coins as sort of emergency money. Then we see again this lovely gentleman who owns both gold and Bitcoin. I think that's the way forward if you want to optimize your investment portfolio. We're going to see interesting times, and for me at least, you know, the older I get, the more I would like to spread. 10 years ago, I had no family, and I was totally fine going all into Bitcoin and to wake up every now and then, see 40% my portfolio down the drain. It's fine. Now it's different. I have a family. I'd like to spread my investments, and I see opportunity for both the assets. In the long run, I would say, given the technology, given the community behind Bitcoin, I would say Bitcoin could win in the long run. But the coming years, we will see more geopolitical instability. I have also a podcast called Reinvent Money, where I talk to geopolitical analysts like John Mersheimer, and if you talk to him and he tells you what's going to happen over the next few years, then the world's going to be quite a unhappy place, unfortunately. And we all know that in those times, gold will thrive. And Bitcoin, let's see if they become just like gold, a safe haven asset to run towards. Then to almost end my presentation with, like, open your mind, unlock your mind. I used to be a gold maximalist, then I became a Bitcoin maximalist, and now I'm a little bit more, you know, we'll see. We'll see what happens. Try to talk to all sides, try to keep an open mind and see all sorts of opportunities. Personally, that's what makes me happy and makes me sleep well at night. So that's what I would advise you to do. Own both Bitcoin and gold. They're, in my opinion, friends and not foes. But I'm pretty sure that I have still some convincing left to do in this room. So feel free to talk to me afterwards, and either I can convince you, or maybe you'll convince me back into a Bitcoin maximalist. But if you want to know more about our website, we also have an English website now, hollandgold.nl/en. And if you want to check out my podcast, go to reinvent.money and you'll see all my interviews. I talk about gold, about Bitcoin, about geopolitics. We definitely need change. We need a new financial system. That's what attracted me to Bitcoin, and that's still what I like about Bitcoin. I like the vibe, the spirit. It's almost like awakenings, almost. And so let's keep on doing this every year in Amsterdam. Let's make Amsterdam the Bitcoin capital of the world. And yeah, thanks so much for your time today.
Welcome back to the Bitcoin Magazine live desk, coming live to you from Bitcoin Amsterdam. I'm joined here by Alan Helm, the head of product at Bitcoin for Corporations, and Sam Wouters, head of marketing at River. Sam, we just discussed briefly the research you've been doing on companies putting Bitcoin on their balance sheet or interested in doing that. Let's get a little bit more in depth. How many Bitcoin are currently held by companies on their balance sheet? Do we have any numbers on that?
Yeah, so we know for sure about the public companies, obviously. The private ones, there's only as much as we know that gets disclosed. But altogether, that's roughly around, I believe it's like 700,000-ish Bitcoin or so across public and private companies that's been disclosed at this point.
And 700,000.
Yeah, and maybe the real number will be, like closer to 800,000 for all we know. But that's roughly the ballpark which it's in. And that's been gradually growing over the past 4 years or so, with like initially MicroStrategy coming in 2020. A lot of people heard about that. And then gradually companies started exploring, like, how can we do this as well? Are there any solutions for us to buy Bitcoin, put it on a balance sheet? And how does that work from a tax perspective as well, an accounting perspective? There have been a lot of questions around that and still are. And we're seeing a lot of those at River as well. As we surveyed our clients and we asked them, like, what's been the holdup basically? What was the most difficult step for you to get to this point? And in so many cases, it's just like, yeah, we don't know how the tax and accounting part works, and we had to figure that out. And that's been a roadblock in many cases.
Yeah, so you mentioned the ballpark of 700,000 to 800,000 Bitcoin held by companies. And by how many companies would that be?
Sure, so that's by roughly, I believe it's 52 public companies have disclosed it. And private ones, like just on River itself, we have over 1,000 private. So probably globally, I would imagine it's like in the 4 to 5 figure range in number of companies that hold Bitcoin on a balance sheet.
Right. So we all know about MicroStrategy, of course. Are there some other companies that we might know of that are holding Bitcoin on a balance sheet? Or are some other well-known ones?
Yeah, I mean, BlackRock is one actually. They don't just have the ETF, but also hold it on there. Block is a big one that people are like historically familiar with from all of the companies and brands that they've had. Reddit has Bitcoin on the balance sheet, I believe. Funny enough, like actually, if you look at the big tech companies, all of their CEOs have also disclosed personally owning Bitcoin, but getting it on the company balance sheet is really challenging when it comes to a public company. And MicroStrategy has kind of been an outlier there to make that big leap as such a large organization.
Right. So what kind of efforts, and this is a question for Alan as well, but let's go to some first. So what kind of efforts are you taking to increase that number, basically?
So a lot of it is like in a lot of companies, you have an internal advocate, someone who really loves Bitcoin, really wants to take that step. And what they need are the tools and the numbers to back up their story and to have that conversation internally to help basically explain to their internal stakeholders that this is a legit thing, that there are other companies in their industry or even direct competitors that are putting Bitcoin on the balance sheet. And like, what is the rationale behind that? And what are the steps to get through that process? And I think MicroStrategy in like a couple of years ago, they sort of open sourced their playbook of like, this is how we did it, this is how you guys can do it too. But that's just one company giving an example there. And what we've been seeing is that a lot of people want more data behind it. Like, what are the trends here? In what industries are people doing this? What are their concerns? What are the steps they go through? And many of them need a partner to be able to do it with. And that's where River helps out as well. So we produced this report as a tool for those basically internal champions to try to make that step.
Right. So, Alan, you're going to take similar efforts, right?
Yeah. So we just announced the launch of Bitcoin for Corporations yesterday, and essentially, we're taking Sam's hard work over here and taking it a step further. First off, fantastic report. Highly recommend anyone who hasn't read it to go ahead and go to, I think it's River Intelligence, river.com, and go ahead and check that out. But essentially, we're finding the CFOs that Sam had just mentioned, and we're arming them not only with the educational knowledge and foundation to go and orange pill the C-suite exec team, but also arming them with the tools like River, when it comes to like custody, tax and compliance, and those sorts of things. And then in addition to that, right, the companies that already have Bitcoin on the balance sheet, we're creating a network that includes MicroStrategy and hopefully Reddit, and some of the other companies that already hold Bitcoin on the balance sheet, to be able to network in a year-round manner and continue to just pushing forward that narrative, because as we've seen, and in your report, right, some of these larger pubcos who do have, other assets on their balance sheet. I think Apple was in there, right, with like a net $15 billion like realized loss or something of the sorts.
Yeah, over the past 5 years, they've just because they like Apple has a huge treasury, something like $150 billion, phenomenally large company. I'm not going to pretend that if I had to manage that treasury, that I'd necessarily be able to do a better job, because they do need to get the mandate to be allowed to buy Bitcoin, and there's a lot of apprehension there probably because they are so public facing. There's so many stakeholders involved who wouldn't want Apple just like backing up Bitcoin. So it's really hard to get that kind of thing through. Well, they should like.
Is it still an image problem for Bitcoin in that sense? Is it still
maybe not just Bitcoin, but also like they're like, is this worth the? I mean, you could argue like $15 billion after adjusting for inflation is a huge loss. So at what point does that become worth the price tag for them basically to say, like, okay, we believe this is a solid thing and we just have to adopt it because we don't have great alternatives. I'm not sure. I'm not Apple. Like, it's kind of interesting to see Tim Cook personally owning Bitcoin, but then not being able to get it through internally. But at some point, it's going to become a big enough problem. They have to move.
Do you think it's just because the market cap of Bitcoin is just not big enough for them yet?
It could be. I mean, it is pretty dang big at this point, and they don't even need to hold a lot. Like, we did some of the math on, like, if over the past 5 years you would have held 97% of your treasury in cash and just 3% in Bitcoin, which for Apple that's like $4 or $5 billion or so, then you would have made a 7% return on your treasury instead of a loss. That's all it takes. So they can do that. Like, it takes a bit of time to build that position up, obviously, without moving the market, but MicroStrategy's done it. So has done more than that, has done 3 times that. So there's no particular reason why they can't do it, other than it's sort of the internal stakeholder convincing that they need to do.
Yeah, essentially it's just someone waiting to tell them that it's okay and that they can do it. And I'm hoping that's what we're going to accomplish, at least with BFC.
So we just heard Paul Buitink speak about gold. Is that have you looked into that? Like, how does it compare to gold? Like the Bitcoin owned on balance sheet compared to gold? Do you have any idea? Like big, publicly traded companies, for example.
Yeah, good question. Actually, I haven't really looked into it too much, like how much they hold. We've looked at the sort of the breakdown of a typical treasury, like what's mostly in there, and a ton of them just hold bonds. But bonds is basically locking into a guaranteed loss. But they like it for the liquidity reasons. Like a lot of these corporations, they just want stuff they can very quickly get rid of. And in that sense, like gold isn't like much better than Bitcoin either. Like there are just challenges involved in moving billions of dollars worth at a day's or a week's notice. So I don't know the exact numbers there or what the adoption looks like. Maybe Paul has some insights there.
Yeah. So. Ellen, real quick, so if one of your contacts at one of these companies asks you, well, why not just get gold? What's your answer? One sentence answer, because we have to get back.
Yeah, well, Bitcoin is the most finite asset in the world, and while gold, has capped and unlimited supply, Bitcoin's the future.
All right, we're heading back to the main stage of Bitcoin Amsterdam.
Is your company ready for the next evolution in financial strategy? Bitcoin for Corporations is your partner in securing the future of your business. With exclusive membership benefits, our comprehensive masterclass, and a network of trusted service providers, we provide the insights and resources to help you incorporate Bitcoin into your financial strategy, ensuring stability and long-term value. Strengthen your business. Innovate with confidence. Bitcoin for Corporations, protecting your treasury and positioning you for the future.